Hi there everyone, it's Service with your mentor. We back again. Yeah guys, in this video we actually made an entire course to help complete beginners up to advanced into understanding this whole strategy guys. We broke it down to the lowest level. Even if you're advanced, you can fast forward the video. However, I do recommend you actually start and watch the entire video because we did cover important factors, the fundamentals that you need in order to master the strategy. And we did all of this for free guys. Remember, we put in all the time to create the PDFs, to make the slides, to basically build it in a way that is going to help you understand on how to apply the strategy. So it would be a major appreciation guys if you can share the video, like, and hit the sub button. Let's roll the intro. Let's go, your mentor. Let's get it. Hi there ladies and gentlemen, this is FSCO your mentor, and today guys we'll be giving you our free strategy which is called trends in trends strategy guys. We have been showing you a lot of examples of us using the strategies in most of our videos in this YouTube channel. Most of those videos are when we actually trading live accounts and showing you guys on how we grow them. So guys, before I start this lesson, I'd first like to say that for those who are new to our channel, we have already given our first free strategy, the high and low strategy. The video pop right here. We did say that once this video reaches 100k views, we are going to make the second video which will be giving you guys our second strategy for free. The first strategy was high and low, and this second strategy is called trends in trends. So I'm now waiting on the charts here because I will be mostly teaching you the strategy while illustrating on this chart guys. As you can see, this is a weekly time frame. All right, so now let's start with the lesson. So yeah guys, here we are. This is the trends in trends strategy guys. Without any further waste of time guys, let's start the lesson. Firstly, I'll start by giving you an introduction of what is a forex trading strategy. Okay, a forex trading strategy is a system that a forex trader uses to determine when to buy or sell. There are many forex strategies that traders can use. Together with technical and fundamental analysis, you can have more edge in the market. So what this means is that guys, when you have a forex strategy, you are now able to know when to buy and when to sell, because when you have a strategy guys, you're going to use your strategy hand in hand with technical and fundamental analysis guys. And do understand guys, a lesson of fundamental analysis is coming in the future, and watch out for that video guys. Having technical and fundamental analysis, this gives you an edge over the market, because already when you're a trader, the market is against you. From the broker side, there's leverage, there's commissions, there's spreads, all of those things that are already against you. So it's important for you guys to have an edge over the market so that you are able to become a profitable trader. So let's continue with the lesson guys. A good forex trading strategy allows a trader to analyze the market and confidently execute trades with proper risk management approach. All right, so like I said before, once you have a strategy guys, you're going to have an edge over the market. You will now approach the market with confidence. So guys, before we start with trends in trends, I'd first like to give you guys an overview of what is technical analysis, because it plays a big role in order for you guys to know how to apply this strategy. Okay, so technical analysis is also known as price action. Technical analysis is the framework in which traders study price movement. The theory is that a person can look at historical price movements and determine the current trading conditions and potential price movement for entry opportunities. So basically guys, when you are a technical analyst or price action trader, you are going to need to go back to the historical price in order for you to determine the current price and have a potential price movement in order to look for entries. Okay, so let me show you all of this guys in the market. So yeah man, we're back in the market. As a trader guys, I did say that it's important for you to look at your historical movement in order to know your current and future movement. For instance guys, when we are a trader, you do see that right now we are in some sort of a straight motion guys. You see right here, the market was just going straight. All right, the market was consolidating, and then from this point the market has been going towards the downside. The motion of this price here has been going towards the downside, and lastly we are seeing a slight bullish momentum towards the upside. So basically guys, I already see the momentums, and remember guys, this is a weekly time frame, so all of these are weekly movement. Already I'm seeing a bullish movement towards the upside. I'm seeing a bearish movement towards the downside, and I'm seeing a consolidation. So you're going to understand that the market actually respects trends. If the market is in a consolidating trend, the market will respect downtrend, the market will respect with sells, and if it's in an uptrend, the market will respect with buys. All right, so basically guys, this is what we mean when we say you need to look at your historical price movement and then understand your current trading conditions, and now look for more opportunities in the future. All right, let's go back to the lesson, and we're back again guys. Let's continue with the lesson. In all cases, the technical analyst, which is the trader, studies the market using historical price movement to identify recognizable and repeatable patterns. These patterns are then analyzed to help traders identify the correct conditions of the market, as well as the possible points to enter and exit the market. Okay guys, let me show you one of the patterns that are recognizable and repeatable basically in the market. All right, I'm gonna give you guys 8 patterns because these are the patterns I usually use when I trade the market. Firstly, start by the bullish flag. That's when the market goes towards the upside, consolidate towards the downside, and shoot back up. Basically, this would be our bullish flag. And our bearish flag is when the market pushes towards the downside and then starts consolidating towards the upside, and at the peak of the consolidation, the market drops. This is the bearish flag. Secondly, we're gonna focus on reversal patterns, guys. What reversal patterns are is when we have a double top and a double bottom, right? This will be our double top there, and this will be our double bottom. We use these patterns as reversals, guys. It can either be a change of a trend or a change of a direction. Okay, so now let me show you another pattern. Patterns that are most likely to appear in the market is when we have ourselves the head and shoulder and the reverse head and shoulder. All right, this will be the head and this will be the shoulders. This will be the head and this will be the shoulders. Both head and shoulder and reverse head and shoulder are also reversal patterns. Okay, so let me give you the last patterns, guys. Lastly, we have wedges. A rising wedge is when the market continues towards the upside and then consolidate towards the upside and then shoots down. This will be a rising wedge. It's rising to drop down. A falling wedge is when the market drops down, consolidate towards the downside, and then shoots back up. This we call a falling or a bearish wedge. All right, these are basically 8 patterns that you should look out for in the market. They are very repeatable and recognizable in the forex market. All right, 2, 4, 6, 8. So guys, let's go back to the lesson. Now let's start with the main cause of the day, which is trends in trends. What is a trend, guys? A trend occurs when prices move in a particular direction over a period of time. Trends can be long term, short term, upwards, downwards, and even sideways. Okay, let me show you this in the market, guys. And we're back in the market, guys. So as you saw, guys, I showed you different types of trends. For instance, I did say we have a long-term trend, we have a short-term trend, we have a sideways trend, we have a bearish trend, and then lastly, we also have a bullish trend. As you saw, guys, these are the 5 types of trends that we have. As you can see, guys, I didn't even draw my trend lines to even spot whether this is a trend or not. I'm only showing you in terms of motion. I'm seeing that the market is not giving me an overall buy or sell, hence I'm saying it's consolidating. And here I do see that the market is actually going towards the downside, which shows me it's a bearish movement, hence I'm saying it's going to be a bearish trend. And from here, I also do see that the market is pushing towards the upside, which is giving me the bullish momentum, hence I'm saying it would be a bullish trend. Now let's go back to the lesson. So here, guys, as you saw, those are the 5 examples I wanted to give you in terms of trends. Now let's continue with the lesson. Prices will fluctuate throughout the course of the day and create a high price and a low price. When the high of the price is above the high on the previous day, it creates a higher high. And when the price is lower than the previous day's low, it creates a lower low. What this means, guys, is that when prices fluctuate, they give us a high and a low. And then now when we have a high and low, we can now determine whether are we having higher highs or lower lows in terms of the market. All right, let me show you what do I mean when I'm saying it's giving me a high and a low in an actual market. So yeah, guys, here we are. For those who don't know which platform am I using here, I'm actually using TradingView implementation. This is for people who want to trade indexes. Indexes are VIX 75, Cash 500, and etc. and etc. I want to show you guys when the market creates highs and lows. Okay, so what do we see? We do see that the market is basically going only straight, doesn't have any overall direction. And then from this point, I see a bullish momentum. from this bullish momentum, I do see that the market is giving me higher highs and higher lows. I want to show you guys how to spot higher highs and higher lows. So basically guys, we've seen that at this motion we have a bullish motion towards the upside, which indicates to us that we are now in a bullish trend, right? Once we discover that motion, we now understand that we have a high. So I would say this was our first high, and then this would be our second high. As you can see guys, this high is higher than the previous high, hence we call it higher high. As we continue, this high is higher than the previous one, hence we call it higher high. This is basically the last high before the trend changes course. We call this top a swing high guys, because this is the high part of the trend. And at the bottom there guys, we have a low, and this is also a high of a low. We call this higher low because it's higher than the previous low, but it's still a low. And then lastly, this will be our last touch for a low, and then this is called a swing low. That's a swing high. At a swing high we have highs, at a swing low we have lows. So there's higher highs and higher lows. That's basically how to spot higher highs and higher lows. And in a downtrend, you would say this would be your first high, and then secondly, this would be your second high. This is now in a bearish trend guys. We've seen that we have a bearish momentum towards the downside, all right? So this would be my third high. As you can see guys, each high is lower than the previous one, hence we call them higher lows. They are slowly going down. This is a swing high. At the bottom here we have a low, and then secondly we have a second low. This is a low at the top, this is a low at the bottom. We call this a lower low because it's lower than the first low, and this will be the third touch, and this will be our third lower low. As you can see guys, we have lower lows at the bottom and lower highs at the top. This is swing high and this is swing low. Alright, so without any further waste of time guys, let's go back to the lesson. This is just an example guys. If you feel like you're getting lost, worry not, just continue with the lesson, as I'll be explaining more on how to understand the market. Alright, so let's continue guys. So as you saw guys, when the high of a price is above the high on the previous day, it creates a higher high. And when the price is lower than the previous day's low, it creates a lower low. I did show you guys on how we approach that. So let's continue guys. When higher highs are combined with a higher low, it demonstrates a market trend. For example, if a currency pair makes 3 consecutive higher highs along with 3 consecutive higher lows, an uptrend is in place, while 3 consecutive lower lows along with 3 consecutive lower highs indicate a downtrend. So basically guys, what that means is that, let's say this market is ranging towards the upside, and then this one is ranging towards the downside. As you can see guys, from this point we have higher highs, and then at this bottom point we have higher lows. And as you can see, similarly here too, we have highs at the top and we have lows at the bottom. So these are higher highs and these are higher lows. You have to understand that guys, in a bullish trend we're looking for highs. These are lower highs and these are lower lows. In a bearish trend we are looking for a bearish momentum. As you can see, consecutive higher highs lead to a bullish trend. Alright, so let's continue with the lesson. So now we are going to focus on market conditions guys. Market conditions are when we're having a bullish and a bearish movement. An impulse move is an overall direction of a trend. These moves tell you when the imbalancement between buyers and sellers is really strong and there is a heavy participation in the market. Okay, so basically guys, an impulse move shows you the overall direction of the trend. And as it shows you the overall direction of the trend, it has a power to give us strong and heavy participation movements in the market. Because when we have impulse moves, it's when we see that the overall direction, let's say for instance we have a bullish momentum, the overall direction of bullish momentum would be a buy. So buyers are most likely to be highly participating in the market when we're in a bullish trend. Alright, so let's continue with the lesson. Logically, more money can be made during these impulse moves, exactly, as they cover more points or pips. So what this means is that guys, when you are in a bullish trend, let's say for instance you're in a bullish trend and then you want to enter a buy, you enter a buy from the bottom, it can lead you to having big profits at the end of the day. Because why? The overall direction is a buy, so we're expecting heavy movements towards the upside. Alright, they are generally more volatile and thus provide us with great opportunities to get more reward with less risk, since the market will stretch more easily in one direction. Exactly what I showed you guys. So basically guys, this means that when you're in a bullish momentum and then you're going for buys, We are risk free because even if you enter a buy from here and then your buys go into profits, once they reach profits, they go back down. You will still be in profits because the market will still continue, come back down, still above that previous high, continue towards the upside. As you can see, guys, now you have less risk when you enter buy in the bullish momentum, because the odds of them going towards a sell, that means it would be a changing trend. All right, but no matter what, we want to be trading with these moves as much as possible, not against them. Okay, so impulse moves are mostly advisable for swing traders. Let's go to the second one, which is correction or pullback. This actually has a lot of names. You can either call it correction, pullback, retest, or retracement. Okay, a correction is a short-term reversal opposite to the main trend. A correction will be a bearish in a bullish trend, while a bearish trend, a correction will be bullish. All right, this is for scalpers. What this means is that, guys, when for instance we have a bearish trend, we know an overall direction would be a sell, right? So when we have buys and sells inside, buys and sells, we do understand that when we enter sells, we're going for overall sells. But when we enter buys, you must know when to enter and also when to exit, because this is just a correction. From this point, if you don't close your buys here, you are now going to be in losses. So it's important for you guys to know that this is for scalping. Corrections are for scalping traders. All right, so let's go back to the lesson. So we're done with this first page. Let me illustrate this in the market. So yeah, guys, here we are. I'm back to Euro OD in the normal trading view for currencies. So I want to show you guys impulse moves and corrections. So I'm going to look for a bullish momentum. Let me remove this, as I've already explained what it was. So what do we see first? When we spot a trend, we spot the direction first. We've seen that overall it's a bullish direction. I do see that we have our first high here. This will be our second high here. And this will be our third high here. Obviously, this is a fake out. First touch, second touch, and third touch. Third touch also has a weak creation, guys. This was a fake out. I'm pretty sure many traders fell for it. All right, so let's continue, guys. At the bottom, I'm seeing my first touch at the bottom, and then I'm seeing also my second touch. All right, so I can see that I have 3 touches at the top and 2 touches at the bottom. I can try to make my third touch here. I will teach you guys along the video on how to basically spot trends. You have to understand that, guys, when you make trends, they won't always be perfect or cater for all lines. Okay, so we have higher highs and higher lows, which indicates to me that I have a bullish trend. This is my swing high, and at the bottom, this is my swing low. As you can see, guys, we have an overall bullish trend towards the upside. So what I want to show you guys is this. In a bullish trend, guys, we have overall buys. So it's important for you to enter buys as the trend is bullish. So when you enter your sells, guys, you have to understand, guys, that your sells would only be a representation of corrections. As you can see, guys, the sell movements are small, but the bullish movements are big. Hence we said, guys, it's important for you to enter buys in an overall buy trend. Why? Because you have small sales opportunities, but you have big buying opportunities. As you can see, the market can have an opportunity to reach the top. And do understand, guys, that's if the market doesn't break outside our trend, and now we're going to enter into a bearish momentum towards the downside. So this is called a correction because this is a bullish trend, meaning that an impulse move would be a buy. This would be a buy towards the upside, an impulse move, and a correction would be a sell. Impulse move, correction, impulse move. All right, so basically that is our impulse move and correction patterns. All right, so let's go back to the lesson. So yeah, guys, those are our market conditions. So let's continue to the next slide. Trend lines play a big role for technical analysts, guys. If you are a price action trader, you need to learn trend lines and how to use them to their fullest capabilities. A trend line connects a swing low to a swing high, from the lowest point of the downward movement to the highest point in the upward movement. When the price rises, the trend line rises accordingly. Connecting these lows with a line results in an ascending trend line, showing you that the prices are trending upwards. Basically, guys, what this means is that a trend line connects swing lows and swing highs. It shows us where the market is ranging. For instance, this is what it means, guys. The market is only going towards sideways. Let's say the market is going sideways. For us, we can spot that we don't have higher highs and higher lows, but we do see that at that point we have a resistance, and at this bottom here we have a support. So trend lines also act as support and resistance because they help us trap the market. For this sideways channel, guys, we don't actually have an impulse move and correction per se, but we do see that the market is actually ranging in this manner, right? Which means that if I'm in a bullish trend, I have a swing high and I have a swing low. Basically, this trend line will be used to connect dots for it to be a trend. All right, as you can see, we have 3 touches at the bottom, 3 touches at the top, and we have a trend line to basically show us how the market is going and where the market is trapped, and basically where we should look for buys and sells. All right, that's what trends are for, guys. Let's continue with the lesson. Why draw trend lines? Why are trend lines important? I've already explained it before, but I'll say it again, guys. Trend lines can act as a support and resistance, but also a break of a trend line can signal a possible change of a trend, which leads to reversal patterns. Don't forget, guys, patterns are important. You see, now we're actually talking about patterns. Patterns go hand in hand with a strategy. Do you understand? This is not a strategy. It's only patterns. I'm still here to give you guys our strategy, okay? I'm just now giving you an overview and preparing you guys so that you're able to understand our strategy, okay? So let's continue. So let me show you this in an actual market. Now I'm gonna give you an example using an index, which is boom crash. All right, so we are in a bearish momentum towards the downside. I did teach you guys on how to spot this. All right, when the market is pushing towards the downside, we have a bearish momentum. That means we'll be looking for what? Sell. So yeah, I want to show you now how important are trend lines. Trend lines act as support and resistance. You do understand that we have a vertical and diagonal support and resistance levels. All right, so I'll show you an example on both of them. We do see that since the market started in August 2019, the market has slightly been going towards the downside. So this has been a bearish momentum. I want to go into the current price movement so that it's easier to show you what I'm talking about. First, what do we look for, guys? We look for a condition. We do see that we have a selling condition towards the downside. So we need to spot our higher highs and our higher lows, right? So as you can see, guys, this would be my first high. This would be my second lower high, my third lower high, my fourth lower high, and my fifth lower high. And at the bottom here, I have a low here. I have a lower low here, and then I have a lower low at the bottom. As long as I have 2 or more touches, still valid to be a reversal point. All right, a trend line is also important to be seen as a reversal point. So once you now have made your dots, a trend line is important to connect your dots together. All right, and do understand that, guys, when you basically connect your trend line, don't try to make it so perfect to a point that you want it to touch all lines. All right, do understand, guys, it's just only an indication of the market direction, not exactly the market should turn there exactly. All right, so secondly, I will join the bottom trend line. So we call this trend line a resistance trend line, guys, because it's resisting the market from basically crossing above. As you can see, guys, the market cannot cross from this point, so meaning that these are our highs, guys. We call this a swing high from this angle. All right, so this is basically a resistance, and at the bottom this is basically a support. So these are our diagonal support and resistances, guys. We are not done. Let me now show you the horizontal support and resistance. This is our first high. Let me change the color. So as you can see, guys, this is our first high, and then we make sure we look for what? Reversals in the market. Everywhere you see a reversal, put a trend line and understand whether we have a support or a resistance. All right, so let me continue. I do see that from this point I also have a lot of reversals. Let me cater for it where there's most touches, and then as I go down, I do also see another reversal point here. This is where the market likes to retest the most, and then as you continue, I still see another one here. The market was basically struggling from this point. I'm trying to cater for these most touches. Let me just put it on the downside. Yeah, and then lastly, this would be our last touch. So as you can see, guys, the importance of trend lines. We now see the market better, guys. I do see that I can easily spot my bullish or bearish momentum. So here, guys, as you can see the importance of trend lines. They give you a beautiful look on the market. You are able to see the opportunities beautifully. So once you have basically made your perfect horizontal and diagonal trend lines, you are now able to see the market properly and see which conditions you are basically looking for and opportunities to trade. We do see that this was first a support, the market broke it, made a resistance, it pushed towards the upside, and from this point we have a double confirmation of a resistance, we have a vertical resistance and a diagonal resistance, guys, which gives us a clear entry for a sell. From this point you would have eaten your sell up until the end part, which is a double confirmation of a support, which means from this point we look for a buy, from this point we look for a sell, and then once we reach this support here we look for buys, and then we reach a sell, and from this point we look for sells, from this point we look for buys. As you can see, guys, it's easier for you to know whether to find your buys and sells when you apply trend line properly, guys. Do understand this is still not the strategy. We do know that when we're in a bearish trend, sells are most likely to be bigger because the overall direction is a sell. This is a correction and an impulse move will be our sells. All right, so let's go back to the lesson. So guys, after you've seen the importance of trend lines, I haven't touched reversal patterns. I will touch it when I basically start explaining the trends in trend strategy. Okay, I'm almost done with giving you guys an overview of how to prepare for the strategy. So let's continue with the lesson. How to draw trend lines. Okay, firstly, you're gonna need a minimum of 2 touches. I've been saying, guys, for you to spot a trend or a reversal point, they need to be at least 2 touches, because from that point we can see that that is a reversal point, because the market, when it reaches that point, it reverses. When you see the market going up, coming back down, going up, coming back down, going up, coming back down, at this point the market is reversing. So that means we have what? We have a trend line. It can either be a resistance or a support, right? So let's continue, guys. Not all points should touch exactly what I did show you on the index that I just analyzed right now. Not all points touched, guys. Don't try to look for something perfect, okay? Don't look for perfect trends. Understand the motion of the trend in order to know which trend it is. So yeah, guys, I'm almost done giving you an overview. So let's go to the main purpose of this video, which is the strategy, guys. Our strategy, guys, the trends in trends strategy. This is one of the most important strategies that I've never had anyone talk about, and they are very crucial and important when you want to be a professional trader. Okay, you can use this strategy hand in hand with the first strategy. As you saw when I analyzed boom crash, I first started by pointing out my highs and lows, which was a strategy we gave you on the previous video, which will pop up right here. And then now I'm using trends in trends. Okay, so without any further waste of time, guys, let's start trends in trends strategy. Trends in trend strategy, guys, we use what we call a multi-time frame analysis. So you're wondering, what is this? When we say multi-time frame analysis, we use the reverse pyramid approach, meaning that this is a reverse pyramid. We start from big, end up on a small. That's what it means when it says reverse pyramid. So let's continue with the lesson. We use the reverse pyramid approach. It involves monitoring or analyzing the same pair across different time frames, starting from the bigger time frame, which is weekly, to the smallest time frame, which is 15 minutes. As you can see, guys, it's important for you to understand that when you want to apply trends in trends, you're going to analyze on different time frames. Okay, the reason we say it's trends in trends is because we have a trend in a bigger time frame and a trend in a smaller time frame. Hence we say trends in trends. Let me show you an example. When we have an overall weekly bullish movement, this would be a weekly. We would know that when we're in a daily, the market also ranges in this manner. So the trend inside the overall trend becomes trends in trends. The trend inside is bearish and the overall trend is bullish. So this is trends in trends, guys. All right, let's go back to the lesson. Usually the larger time frame is used to establish a longer term trend and understanding of the market structure and the price behavior as a whole, while a shorter time frame is used to spot ideal entries into the market, which is very true, guys. We use the larger time frame to see the overall of the market, guys, and we use the smaller time frame to look for entries, guys. We look for entry triggers, or we look for opportunities into the market. I'm going to show you guys how we're going to apply trends in trend strategy with at least minimum of 4 instruments. One might be a currency, one might be Nasdaq, and then one might be index. So it's currency, index, and indice. I'm going to analyze this strategy on those 3 instruments. Okay, so before I go to the chart, let me give you an MB, which is very important, not a Bella. Each time frame has its own trends, which means you'll need to cater for trends in different time frames, which results to trends in trends strategy. Now, without any further waste of time, guys, let's go to the market. And we're back again, guys. For those who have reached this far into the video, I'd like to say that we appreciate all the love and support, guys. And I appreciate the fact that you take your career seriously of becoming a professional trader, all right? So, guys, let's focus on the main course of this lesson, guys, okay? This is the trends in trend strategy, guys. I'm going to show you guys on how to apply it practically. So, I'll choose 3 or 2 pairs depending on whether you are understanding or not, all right? So, what is trends in trends, guys? Trends in trends is made up of different time frames that have their own analysis on each time frame. Let me repeat that. Trends in trends is made up of different time frames that have their own trend analysis on each time frame, guys. Basically, when you're applying trends in trends, guys, you should know that when it comes to analysis, we have analysis on each time frame. All right, let me give you an example of these trends. First, we have the primary trend. The primary trend is important for the overall look of the market as a whole. We usually use weekly analysis, guys, because you want to see the whole market to see which motion is basically going to. All right, you don't want to hold sales in a buying market. So secondly, we have the secondary trend. The secondary trend is used to identify highs and low of the day, meaning that we're going to focus on the daily time frame because you want to spot the high of the day and the low in the day. All right. So lastly, we have the third trend. The third trend is to spot entry and exit point. Usually this one is on the 4-hour time frame all the way down to 15 minutes. We use this last trend to basically look for entry opportunities. All right. So without any further waste of time, guys, let's start the lesson. So, guys, this will be the first pair that I'll be showing you on how to apply trends in trend strategy, okay? As you can see, this is Euro OD, a currency pair, and I'm currently on a weekly time frame, all right? Firstly, guys, before we analyze, I did show you that it's important for you as a trader, before you start trading, you go back to check historical price movement. From this point on, we see that the market has had a bearish momentum towards the downside. And then from this point, we had basically a consolidating, but slightly going towards the downside trend, all right? And then see that from this point on, the market now started to shift and go towards the downside after a strong push towards the upside first. So basically, this was to create a high, all right? This is basically our biggest high that we have here. I'm going to outline it. I'm now using the high and low strategy, guys. High and low strategy helps us to know the high and low of the weekly, daily, or 4-hour time frame that you want to apply it on, right? So now I'm seeing that the market has reached this high and it has never touched it before. So I know that is the most strongest reversal point, all right? Now let's continue, guys. After the market basically continues to push towards the downside, it now has a bullish momentum towards the upside. So now we understand the motion of this trend in the current moment, guys. I use the history to understand the current, guys. So now I know that I am looking for future possible up movements, all right? I'm looking for a bullish in this uptrend. I did tell you guys, when you have a buy in a bullish trend, you are most likely to have more profits because it's an impulse move in that trend, all right? After we've used the historical movement, I told you guys that secondly, you need to spot your swing high and your swing low, meaning that where now I've discovered that this is a buying motion, I need to find my highs. I'm seeing that after this bearish momentum, this was my first bullish point, all right? This was my first biggest bullish point, and then this was my second biggest bullish point, and then this is the last one. Obviously, guys, you do understand that this is a fake out. That's when the market went up to convince people that's going for buys and actually drops hard. It's called the fake out, guys. Usually the market does this to hunt your stop losses, okay? So let's continue. After seeing that we have 3 consecutive highs, we can see that it's a valid trend line. I did teach you guys, when you discover a trend line, you need a minimum of at least 2 touches, and here we have 3, all right? So now let's place our trend line. This is called uptrending resistance trend line. As you can see here, guys, we have spotted our highs. This line now, we call it swing high. Now secondly, we look for swing lows. All right, we do see that our lowest first point was this one before the market started to change, and then this was our second lowest point, and then this was our final lowest point. All right, this is a high, this is a higher high, and this is a higher high. This is a low, this is a lower high, and this is a lower high. Basically, this is highs, meaning that we are now in a bullish trend. So now I'm using a supporting trend line, guys. This is a bullish supporting trend line. All right, so now that we've discovered our trends, we go to the next step. You now need to understand, do we have an impulse move or a correction? What do I see, guys? In this trend, guys, we had an impulse move towards the upside, and then from here we had a retest. This is showing me that from this point on, we have some sort of a resistance, guys. We have an area of reversals. All right, so I'm using the high and low strategy right now. I'm finding reversal points. Understand, guys, the high and low strategy is to help you spot your reversal points in the market. I'm seeing that this is a strong reversal point. As you can see, the market retested there, and I'm also seeing another one here already. Let me put my highs and lows to see the reversals of the market. I'm seeing from this point we had a support, and then now it's a resistance and back again to the support. Now I'm finding my lowest point out of the week. This is the lowest point of the week, basically waiting to reach the highest point of the week. That's if the market gets there. All right, after spotting our highs and lows with the high and low strategy, let's focus on the trends in trend strategy. So now that I've discovered my highs and lows, we have an impulse move towards the upside because it's a bullish market, and impulse move is a buy. And then secondly, we have what? We have a correction. This correction made a double bottom. As you can see, guys, it made a double bottom. So after a push towards the downside, it went back up a bit to test this new high, went back down and gave us an impulse move towards the upside. And then after that, we had a correction, and then from a correction, we had the biggest impulse move towards the outside. Remember, guys, you are most likely to have bigger buys in a bullish trend. So lastly, after hitting that high that also gave people a fake out, we went back for a correction. So now that we had a correction, guys, it means we are now looking for what? For an impulse move towards the upside. We are looking for a bullish momentum. Okay, so now that I'm using my weekly to understand which opportunities should I focus on. All right, now let's dive deeper into the daily time frame. So yeah, guys, we are in the daily time frame. The daily time frame, guys, I did say you're going to identify the highs and low of the day, because the first primary trend shows us the overall look of the market, and the second one we spot the high in the day. The last one we have entries. Now that we have discovered our impulse moving correction, we know that we are currently looking for an impulse move towards the upside. From this point again, I do see that we have some sort of a resistance, guys. From this point, I'm seeing that the market cannot cross above that line. Okay, we did also have a slightly bullish momentum towards the upside. This is now the trend inside a trend, guys. This is a secondary trend in a big primary trend. You do know how to spot a trend, guys. We can see it's a bullish momentum towards the upside. Let me put this properly. We do see that, guys, we have a bullish momentum in an overall bullish momentum. This is trends in trends. This is called a secondary trend. We are still looking for what? Highs and lows of the day in this trend. So now let me focus on the current market condition, guys. So yeah, guys, currently I do see that we had first a bullish trend. As you can see right here, guys, this was our bullish trend. We did say, guys, you can discover patterns inside the market. I can actually see that we had a pattern here. I don't know if you remember it. I'll first draw it before I mention its name. I did teach you guys about a pattern that goes towards the downside, consolidate towards the upside, and then continues dropping towards the downside. Do you remember, guys? In the beginning of the lesson, I did say, guys, we have a pattern like this one that is most likely to be repeated. Those who forgot, we call this, guys, a bearish flag, guys. This is a bearish flag. Its second partner is a bullish flag, whereby the market will now consolidate towards the downside before shooting back up. All right, guys. And remember, I said this, guys, don't try to have perfect patterns, guys. The patterns are only a guideline. Just the same way I did say about the trend line. It doesn't say the market must strictly turn from this point. It's basically a zone. It's an area whereby we expect, okay? So yeah, guys, let's continue with the lesson. We are now seeing that the market is slightly creating a small bullish momentum, guys. We are seeing that we have a small bullish momentum here. What could confirm my buys, guys? You know, you must have a confirmation when you're applying trends in trend strategy, guys. Firstly, we have the secondary trends in. I haven't yet moved to the third trend, okay? We have the primary, we have the secondary trend, but now we're going to focus on the third trend after I finish analyzing. I need to show you guys the importance of a confirmation. What could confirm our buys from this point on? Let me also remove this. We have a resistant trend line towards the downside, guys. I want to show you something, the importance of trend lines, guys. I can see that I want to cater for most touches. So this is my most touches area. Why did I put this line, guys? I want to show you the importance of having this line. This is called a confirmation with a trend line. You do see that from this point on, guys, we are looking for what? Selling opportunities. Hence, I'm saying this is a resistant trend line, guys. A downtrending resistance, basically. It's some sort of a downtrend. The motion from here is preventing the market from crossing above. So this is a resistance. And from this point, we have a double bottom confirmation of breaking outside before a continuous buy towards the upside. That is also another opportunity that shows us our bullish trend. From this trend line, once we break it, we should now see it as a support. We're waiting for the market to now support this line towards the upside. Okay, so that is one of my first confirmations to see that I am going for overall buys, because the market has already broken out of our strongest resistance line. Let's dive in deeper to look for entries. So yeah, guys, here we are. As you can see, this is the 4-hour time frame. We are now looking for what? Entry opportunity, guys. What do I see, guys? I do see that we are in a bullish trend, and then we here have a double bottom in this bullish trend, and then the market is basically being entering buys from this point, and then I'm seeing here some sort of a resistance, guys. I'm seeing some sort of a resistance here, especially let me cater for most touches. From this point on, I'm seeing that we had a lot of touches, meaning that right now the market has two possibilities. We have a sell, because we do see that from here it reverses, or it can either break above and continue with the buys, basically. All right, that is the two opportunities we have. So for you to choose whether are you going for buys or sells, you're going to need a confirmation. You're going to need something that confirms to you that this area is an area whereby I know once the market crosses, we're going for buys, and if the market doesn't cross, we are going for sells. Okay, let me remove the ray. I advise people to use zone, especially on the third trend or the smaller time frame trends, because you are now looking for entry opportunities. You need to look for areas and not exactly a line. All right, the second reversals, the market can also from that point have buys. All right, from this point that we are at, we can again look for buys, guys. We can still look for buys. We can see that the market went up, gave us a retest on the strong zone of ours here, and then once it gives us a retest, we are now expecting push towards the upside. So this is how I would enter my entry if I want to enter this bullish momentum. All right, I want to enter a buy because we have reached the resistance, we've reached the support, and we have to reach the resistance one more time. That is also my second confirmation of why I basically want to enter this. I'm seeing that we have a what? We have an impulse move, correction, impulse move, correction, double bottom of a correction, impulse move, correction. A correction is a retest, and then now again we failed to try, we retest, we're waiting for a push towards the upside to basically break the strong resistance that we have here. All right, now that I have discovered that I want to enter, I would say first TP target would be on the nearest high before the overall trend high. So I would enter here, this would be my first take profit, and then this would be my second take profit when the market actually reaches the top of the trend. So for my stop loss, I would put it from second low, guys. When you put it on the first low, the market can come down, stop you out as it's still inside the trend, guys. So if the market breaks out of the trend, gives us a retest, and then breaks my stop loss, I do know that we are now looking for sales. All right, so that's more of a confirmation for me. If the market basically stops from this point, it now goes back up into profits, and my stop loss will be safe. Let's go to the next instrument, which would be VIX 75. Let's go, and we're back again, guys. This is Volatility 75 Index. It's an index, not an indice. An index is when we have US30, Nasdaq, etc. This is an index, guys. You usually find them in an MT5 platform if you want to trade. And then if you want to analyze them, you're going to use TradingView implementation or TradingViewBinary.com. This is the only place you can find them, as they are not in the normal TradingView. Okay, so now that we are about to start an index, guys, this index doesn't have a weekly time frame, so meaning that our day time frame will be our primary time frame, and the 4 hour will be a secondary, and then 30 minutes or 15 will be the third trend. Okay, so let's continue with the lesson, guys. I did say that before you start analyzing, you look at the historical history. As you can see, VIX 75 started on basically the 5th month of 2018. Let me show you the 5th month of 2018. That's where VIX started, and then ever since it started, guys, we can see that it's been giving us nothing but bullish momentum towards the upside. As you can see, guys, it's been pushing towards the upside and giving us highs and lows. So after spotting that this is a strong bullish market, we need to now spot our highs and lows. Before we even start to spot our trends, let's first spot our highs and lows and understand how does this market keep on pushing up. Okay, so firstly, I'm seeing that we have our first reversal points from this area. I am now looking for reversal points, guys. It can either be a stop loss or resistance. Just look for where the market usually touches the most. Okay, so that is my first reversal point. This would be my second reversal point. Do understand, guys, these are also fake outs. Don't try to cater for all lines. I did say that, guys. Don't try to have a perfect market. Okay, now as we continue, I do see that we have our second reversal point. It would be here. I can see that we also have a lot of reversals at the top. So this area right here, guys, is our zone, guys. Why? Because the market has different types of spikes. Similarly here too, we have a zone. All right, let me also place another one here. This is basically areas whereby the market touched the most. And as we continue, guys, we are seeing that also from here we have some sorts of highs and lows. This is our high and low strategy, guys. For those who missed out the video, go check it out so that you are able to know how to apply them like I am applying them now. Okay, these are our highs and lows, guys. I first started discovering our highs and lows so that you can see where does the market basically like to reverse. Okay, we can see that we are in a daily time frame. I did tell you guys, usually on daily time frames we discover highs and lows of the day. So now our daily time frame is acting as a primary trend. We did now analyze from an outlook, and we see that we have a bullish momentum towards the upside. So let's look at the current market. From our strong push towards the upside, guys, we are seeing that now we had a retest and then a push towards the upside. So guys, let me show you something. Another pattern that's repeating itself. We actually have two patterns. You can actually try to make two if you don't try to make a perfect market pattern. The first pattern that I saw was the double bottom. Okay, guys, as you can see, this was a double bottom, hence confirms a strong push towards the upside. And secondly, guys, we have a reverse head and shoulder. Okay, it's not perfect as the double bottom, but that's also one of the patterns that I've seen as I'm looking at VIX 75. And then lastly, we have a bullish flag. Market went up, went to give us a retest, and then continued towards the upside. After a double bottom, we had a bullish flag. So guys, those are the patterns that you must learn to spot while you are trading. So let's focus on the current market, guys. Let me dive deeper. So yeah, guys, here we are. This is our 4-hour candle. We do see that we are at a point whereby we come from a double bottom or a head and shoulder, and then we had a consolidation towards the upside. The market gave us a high, and then we're seeing a retest here, guys. We've seen that from this point here we had a bearish trend. I did teach you guys on how to spot these trends very easily. And then this would be the swing high. So this is our swing low, and then this is our swing high. We have lower highs. Basically each high is lower than the previous one, and we have lower lows. Each low is lower than the previous one. We have multiple touches to confirm, multiple touches to confirm, meaning that in this sell trend our impulse move is a sell. Okay, so what happened here, guys? We do see that before the market also broke outside, it also gave us here a double bottom confirmation, to break outside the trend. Okay, so that's also one of the most repeatable patterns. Now let's focus on the current market, guys. We now want to discover the highs and lows of today. I'm seeing that I have multiple touches, guys. I have a touch here, I have a touch here, and I have a touch here. What happens when you see multiple touches, guys? You try to connect the dots of the swing high with a trend line. Perfectly, let me try to cater for it. Basically, the last touch wasn't touched here, meaning that we are seeing we still have room for the market to still push up to touch our resistance before giving us future sells. We are seeing that the market has still opportunity to push up before giving us future sells. This is a reversal area, guys. So let's continue. We do see that we have a touch here, and a touch there. Let's try to make a line to cater for the market as neatly as you possibly can. Okay, we do see that from this point we have some sort of a zone, guys, an area whereby the market reverses. It's a bigger area, hence I don't want to use a trend line because it's a zone. There's a lot of reversals in this area. And then right here as well, guys, I do see that we have here another zone which acts as a point whereby the market likes to reverse. Okay, currently we are here. We're going to need to spot entries, guys. So let me dive in deeper to a 30 minutes time. So yeah, guys, here we are. I actually moved to a 1 hour time frame because the 30 minutes time frame wasn't showing the trend as a whole. It was too big for a small trend. So I'm gonna use the 1 hour instead. On our third trend, guys, that's where we look for entry and exit points, guys. We do see that we are currently at the bottom of an overall primary bullish trend, meaning that buys are most likely to occur because we are at a support. Currently, we do see that the market is at a high, and at this high, we did say at first that the market can either drop from this point or continue and touch the overall high of this small third bullish trend. Okay, so let me remove all this. I'm gonna need now to find a confirmation, guys. I need to find something that confirms for my entry. Okay, one touch on the support, second touch on the support. I'm expecting a what? Push towards the upside. I'm seeing that, guys, we have a double bottom, guys. A double bottom is used to change a trend, guys. When a double bottom occurs, that's a reversal pattern which confirms my bullish movement. Now that I discovered the bottom, or basically the starting point of this bullish movement, I want to understand that is it gonna retest on this. I'm wondering now that is it gonna retest on this second level before going back up, or will it just straight go back up from the point? So I would place my stop loss at this area right here. Let me change the color of this. You can barely even see it. Let me make it purple. So you can see, guys, this is our first strong reversal point. This is our second strong reversal point. I know my stop loss is a bit wider than normal, but as you can see, guys, I want to basically touch the top of the trend as there isn't any second market here. All right, so I'm trying to basically push the buys, guys. I am going for buys to basically reach the top, and my setup can only be invalidated if it crossed the first line and the second line, which would be a sell. If the market starts going down, it still has enough opportunity to reverse here as there is another reversal point before going back into buys. Hence, I'm saying I'm having a wider stop loss, guys. So basically, guys, that's how you apply the strategy. You're going to need to use different types of time frames, guys. We start from the weekly, you go to daily, 4 hour, 1 hour, and 30 minutes. All of those time frames, guys, require their own analysis. Hence, we say trends in trends. The more you practice how to apply the strategy, the better you can get. Anyways, guys, I'd like to thank everyone who finished the video with us. More videos are coming in the future. FS Coach, your mentor, signing out.